there. So when I look at my risk reward, I'm looking at, let's say 9. What is that? 14 at least. So that's not quite the best, if I'm adding this up right. Not quite even 2 to 1. The potential on this trade, however, makes the trade worth it. And the closer I can get in at 13406 or 7, the tighter my stop can be, and the lower my risk, better my risk reward. Question, so you wouldn't have been looking to short as price approached the LVN from the low? So as price approach, yes, I would. I would be looking for, initially, you're exactly right, I would be looking for a short opportunity here, back down into at least VPOC, if not lower. That's exactly what I would have been looking for. And I would have let the print identify for me whether or not this was going to be a good trade. Now, what I can't, it's with a 30-10 chart, it's difficult to see the exact time. But if I look at the price at 3407, right there, what I can do is look here, and there was, look at the print. Let me make this a little bit bigger. Right in front of the print, right in front of that low volume area, there was buying cluster and momentum dots. There was nothing, even on the other side of the print, that said, get into that trade. I mean, I can't see how it developed. I can see some strength at the bid right here, but it's right as this was developing, and there's nothing in the print that says get into that trade short. So remember, I identify the area, and then once price approaches that area, I use the print to help me identify whether or not I want to get into that trade, and get into the trade and then manage that trade. Because the print with the OFA order flow chart is ultimate truth. In the most current context. So does that make sense, Edmore? Did I answer that question? Okay, thank you. Yep, you're very welcome. Another question about 1950 weekly VPOC, very tough level to break. Thoughts? Yeah, that's exactly where Wayne was going to with that 15 level. If that finally gets broken, potential significant snap to the upside, without question. Without question. All right. So does that make sense, going from longer time frame to smaller time frame as a process? Okay. Because again, when I hit that button, that's the moment of truth on my trade. The only thing going to take my trade to a win or a loss, again, is everything that comes in after that moment. So the best I can do is use the market generated information to identify areas and levels that, if I'm looking for a fade, that will likely have the potential, likely have the probability, more so than other spots where the other side will step in and move trade the other direction. If I'm looking for a trend trade, then I'm looking for a pullback, typically against a low volume area, to get into that trade and then take that to, and then I go out. So let's say, for example, I'm trending higher and price comes through a low volume area. We can do that in the ES here today. Where is it? Price comes through the low volume area, and that was a of 07 and a quarter, 07. And then I look to go long there. The target I'm looking for is that high volume area there. And I talked about this earlier, 1475. Now look at it, bounced off 1475 to the stinking tick up there. If buyers can't get any kind of traction and bring this back up, then I would start looking to short on the other side of 07, 675. I would wait for price, I'd take my profit at some point, and then my next trade would be not a long. Remember, my rule is if price bounces hard off of a high volume area, then the low volume area below it is at risk. If price bounces hard off a high volume area from the top side, the low volume area above is at risk. So if this keeps moving lower and buyers can't make any traction, then I know that there is significant risk. And the logic behind this, the logic of the auction is, remember, buyers and sellers, people, participants get into positions to make money. And so far in this rotation, buyers and sellers have proven that this is fair price. You can see trading above that level and below that level. So this is fair price. If in the current context of our market, the buyers are saying this is not fair price, we're not willing to commit prices any higher than that, we're not willing to commit our capital to prices higher than this, then they will find a different fair price. And that different fair price where they're willing to get in to make money is likely lower. And it's likely not going to be, it may still be this 07 area, but it makes this level at more risk because now sellers are getting some momentum, if you will. They're having conviction, they're having success at moving price. It's likely that they're going to move price down through this level again, in which I would look to short on a retest. Then by definition in auction theory, price should test the weekly value low volume area. Let's be clear about that. In auction theory, the 23.7, I've got 24, 25 as a high volume area. Let me just confirm that. I have 21 and then 24.75 there. But see this 21 right here and then 24.25. In auction theory, first of all, and I got to be careful because I think I use this word, the word should. It's kind of like, stupid is what stupid does. The market is what the market does. And in auction theory, the auction theory would suggest that participants believe that this is fair price, and they've proven that to be fair price, right? In the most recent context, they've been willing to enter trades and push price higher. They've been willing to enter trades and push price lower. Thus the volume, this is suggesting a fair price. In the current context with auction theory is if this is not going to be considered fair price in actual activity, meaning actual orders on the part of the buyers, then the buyers from an auction standpoint will find a better price. They will relent and they will find a better price. And then we start looking lower to where that better price would be. That better price might be down at 07 again. I would give this, 9 area, 9 to 10 area some props until buyers stop supporting that today. When they stop supporting that, likely coming down to this 7.25, 675, and we might see price end lower for the day. But from an auction theory standpoint, if this is not fair price for buyers, then they will find a different fair price. They'll enter when they believe that they can make money again. And the level of conviction is displayed by the print. I've got everything on full safeties now, so I'm in sim on all this stuff. You can see this print still open down here. It bounced off of IB right now, but this doesn't look done to the downside. Look at that weakness, 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 weakness. If something doesn't change in the buyers, then it's likely that 909.50 and before the end of the day, 0675, 07 is, and we may even wind up down below that. But everything in this auction right now is saying that the buyers, from an auction theory standpoint, the buyers have lost conviction above this level and would need to re-engage, begin to hold the sellers and re-engage in a pretty powerful way. And once through here, we're likely to see some stops go off. And I would say probably, not should, but the probability is high or higher that this will stretch up to 17 quarter. So, value area high for the weekly. Yeah, if I look at the value area high right now, right, for the weekly is up around that 23, 2350, 2375. And just because that's the value area high for the week, we've tested that once and that failed. So we did have one test of value area high, the weekly value area high. There's nothing in auction theory that would suggest that it's going to test up there again. So these, from an auction theory standpoint, it's at these points, the low volume, what price does around these low volume areas and high volume areas, start to tell you what the higher probability is of where price is going to go. So at a low volume area, remember the principles is I'm looking for price to either slingshot through with support from buyers and sellers, or I'm looking for price to bounce off hard. Depending what price does at that level, either bounces or slingshots through, at that point, from an auction standpoint, my next level of, okay, more probability that it's going to do this starts to take shape. And as it bounces off of a low volume area, the probability is it's coming back to the most current high volume area. If it comes through, then it's most likely going to go to the next high volume area, which is why I like to take the retests when it comes through. And my target is that high volume area. And let's say it gets up to that high volume area. Let's say it comes through 1725 as an example. I'm going to try to make this bigger. I want you to know that I put my bars, my candles very light on purpose. So I'm focusing more on the profile than I am on these bars. It's a 30-15 chart. I'm not really using it to trade. But let's say price comes through 17. And at the time it comes through 17, I can see a spike of volume on the 1 minute chart. I can see momentum dots in my order flow chart. I can see volume cluster supporting all the buying as it comes through there. I'm looking for a long as price comes back down to test this level, especially if the intraday volume profile suggests a long right here. If the intraday volume profile suggests a long here, then I'm looking for this price. Now back up to 23.75, 24.50, right there. This might be my first scale at 21.75. Looking for price to come at least there, if not here, and then potentially beyond up to this 30, 31 level. Oh, absolutely good. I use a 30-15 chart for the ES, 30-10 chart for 60. The reason I use the 30-10 chart for the ES is, and I could do that with oil as well. I could use the 30-15. However, I see a lot more swings within the day on. Oh, sorry. Your question is, what do I use for CL? For CL, I am using, where is my CL chart? Sorry, I missed the question. Sometimes my eyes play tricks on me. CL, I'm using 30-10. 30-10 on the CL. Good question. And sometimes if I'm using it just for volume profile, it really doesn't matter. I mean, it's capturing all the data. It doesn't matter. The time that the probe and rotation matters in terms of actual trading is when you're actually using it for an entry and trade management, and you're using it in context with the order flow. The probe and rotation, and actually if you're using the probe and rotation with a, and this is my experience with a structure chart, when you're using the chart to actually enter and manage a trade, then your probe and rotation settings matter significantly, whether you're using a structure chart or an order flow chart. When you're using a structure chart for determining a volume profile, then they don't matter as much because all you're trying to do is just collect the volume over a certain time. Yeah, question about the, anyway, first of all, I want to make sure that this is making sense to you all, right? So these unfair highs and lows, depending upon what price is relative to the auction, high volume areas, I'm expecting rotation. Look what we're getting around this high volume area rotation. When the market comes to that level and doesn't do what the market normally does, which is rotate around these areas because it's fair price, buyers should be hanging in there and believing that this is fair price and be willing to put their capital forward to move price through here. When that isn't happening, that speaks volumes to what's going on in the auction. Now again, I'd still give today's buyers down through this 0975 level, and if they kind of come through here, then good night, Gracie. We may see more lows for the day. All right, what am I looking at here? All right. So as long as you get that, okay, DB does say each time you restart Ninja, you'll need to draw new profiles. Okay, we can go through the homework here in a couple of minutes. So does that make sense, what I'm talking about? And how I go about, the homework is pretty much the same all of the time. Let me see something. All right, I'm going to try to build a chart here that I hope doesn't crash my computer here. But it's going to take a little while to build to move on to the next thing. So that was ES. Here's 6E. You can see that trade's actually working pretty well. Again, what we're looking for as it comes down to is this setup. We're looking for weakness at the bid, strength at the offer. We had that. There's our long. And this doesn't look finished to the upside. This doesn't look either. So there's a lot of evidence that point to this actually coming all the way back up. It's just this time of day. If you're a day trader with 6E, forget about it. Okay? So same thing with the 6E. I mean, and this is why I said before, once you kind of understand volume profile and the elements and the attributes, you can use them in many different instruments. It's just a matter of understanding specific nuances, like with oil, and understanding that there's a nuance in oil. It's very retracement extension based, and I start to look for those retracement levels, again, between that 68 or 61 and 78, 76%. And if they line up with the low volume area, even better. All right. There was a question about this chart. I want to go over this. Bring it over. The market profile analysis. And market profile it's just the market. You can call it the instrument analysis. And these levels, you want to go through the first tab. How we might, let's see, have a little trouble identifying how some of the information would be used in practice. Okay, that's a good, fair question. Couple of different ways. If I'm taking a high-level look at these instruments, open, at this instrument across the different days, what I want to see in the week is what's happening at the open, what's happening at the close. Is it closing around the same place? Is it opening around the same place? Where's the VPOC? Is that getting higher or lower? Again, the only other piece of information I would recommend as a good guiding piece of data is overall daily volume. So how we'd use the rest of this is part of this is now looking down here the point range. I'm looking at it's August, and on Wednesday we've got 18 and a quarter points. Yesterday, 26 points. So we're getting a lot of range on the ES into August, which is unusual. It's great, but it's unusual. So that tells me we've got a little bit more volatility in the market. And by looking at where things open, is it opening outside of range? Yep. It's not only moving far, but it's doing so as it opens up out of range. So it's telling me, again, confirming we're getting big swings in the market, which tells me we're getting a little bit more volatility, which also says that I just need to watch my levels as price approaches them, and also know that as my levels hold, my targets are more likely going to get hit. So as I look at this information on a daily basis, I want to understand, outside high. Price opened up outside. It opened up outside of the previous range to the upside. And when I look at where things settled at the end of the day, VPOC was low, and it closed inside low. So it closed inside of value on the low end of value. So that instinctively tells me from a conviction standpoint that buyers, at least in this current context, really don't have much strength. At least they're not willing to show much conviction. So we opened up, we had an opportunity outside the previous day's range, and we wound up closing inside of value, but at the low end. This day just shouted a lot of weakness to the downside. So I start using these numbers, especially like closing swing high, closing swing low. These numbers get plugged directly into my my charts for the next day. And with the opening swing, I'm not really using previous day's opening swing. But what I'm looking for in the open swing is, with this type of open outside of value, am I typically now seeing a lot of activity at the open, 3, 4, 5 point open swings? Or is it pretty average, 2.5, 3 point opening swing? And that's what we're getting. So from an open standpoint, my context is we're getting pretty good standard openings on the ES, and that just gives me some context of what to look for. Now the next day it may change, which is why I don't, for today, I don't mark yesterday's opening swing. I don't do anything with that for today's trading, but it just kind of gives me a sense for that day. Was there a significant amount of conviction? Was there a significant amount of conviction early on to the upside? And did it close high? Did it close lower? That just kind of gives me sentiment for the day. So all of this information on this first tab is to give me information about the day. So when I go here and I'm doing my commentary about the day, and in between I'm marking my levels, right? As I'm going back through the day, I can start doing things like this. 1725 was broken with a lot of contracts. So this number now becomes an important number for me. The last test higher was 650. And prior to that, beyond that, the test was up to 1375. So 1375 now goes into my trading plan as a level for a short, because in the last 2 days, each day was showing me that buyers just don't have it. Now, if buyers start getting aggressive through 1375, and they did for a little bit today, but if they start really getting aggressive through there, then maybe we've got a change in the market, and the buyers may can start to look for them to get more aggressive, and I can start looking for things like 2375 and possibly 31. So that first tab is really just to kind of get the data out. Get the data out for that day. I go back and I look at the swings for the day. Maybe not so much the prints, but I look at the swings to say, and this is a really good time to use the structure chart. Where did things fail? Where was price accepted? Where did they fail to the upside? Did it fail again to the upside? How bad did it fail? So that first tab is really just to get the data out there. And then I go back using that data to kind of do an assessment of the day. And then I force myself to write it down to say, this is what buyers and sellers are really trying to do. This price was important today. This level got acceptance. And buyers really showed that this was important. Sellers showed that this was important to them. And so I'm getting that context for my next, for building eventually my trading plan. So when I take that daily context and then I build the, where are my high volume, low volume levels in the day and over time, now I've got something that says where I have these low volume areas lining up today in a longer term, say low volume area. The next day, I got a great level for part of my trade plan. Yeah, I'm looking as evidence, right? Adding to my framework and my my context of the overall market. Yep. On my 30, 15, 10, 30, 10 charts, do I always have it set at 90 days? No, I actually, and DB is going to help me do this, so I'll have to write up some instructions on how to do it. DB is going to show me how to use the continuous contract so I can go back even further. And then I'll write up some instructions. In fact, what I'll probably do is do a video. And then they'll post the video and you can go back and see how to do a longer term profile. Yep, you're very welcome. But what I want to make sure of that you all understand is how to use this in a manner that allows you to effectively trade. I don't really want to say in any market because that's, that can be a little bit of an oversell, if you will. And in some cases, if you don't really know how to use it, that's why we go through the principles. And when you understand the principles of the volume profile and the elements of the volume profile, you can truly use it effectively. But if you don't, and you just, somebody walks in and says, oh, high volume area, that's where price is going, low volume area, it's going to bounce off of. And I believe me, I've taught people who've had that perception after we're done. You're not going to be able to use it effectively. You have to know what it means relative to the auction and what it means to say, okay, the probability is if buyers don't believe that this is fair price, the probability is price is now going back to this level. So now I can look for, if that's long or short, I can look for a trade back to that level. Yep, you're welcome. So we've been going at it for 4 hours today. How are people doing? So from a, I don't want to say big picture standpoint, do you see how I have to start with the belief, with the knowledge, and this is why we started here on the first day. My basic principle in trading is that when I place my trade, only buyers and sellers, current buyers and sellers, are going to take that trade into profit. Nothing else will do it. And so as I'm looking for a trade, whether it be a trade on a trend or a trade in a fade, I am using these tools and then back down to the print to identify levels and then give me the information that says, yes, in fact, buyers are stepping in at this place or sellers are stepping in at this place, and you have reason to make a trade here. And then I manage that trade. So my ultimate truth in a trade or getting into a trade is the print. It's the order flow. And it is why I hope you're okay with the shameless plug, DB, but it is why I love OFA, because it is my moment of truth. It is not only my moment of truth, the order flow, but it is it is what helps me manage my trade and manage my risk. And you saw me manage risk today. And I do that simply using an order flow tool that through color and through the algorithm sitting behind it tells me what's going on in the auction at the most important time, which is when I'm entering the trade and as I'm managing the trade. Nothing else gives me better information. And if it's true, if I actually believe and get myself to understand that I can never know the future, the market will always be uncertain, all I can ever do is manage my risk. If those things are true, then I can manage with some level of confidence. I know I can't control, but I can manage with confidence. And if I can manage with confidence, then I won't be fearful and I won't be, which would lead me to be subjective in the trade. And being subjective in the trade, the reason people mismanage trades is not just because they're scared, but number one, they don't have the information in front of them. And even if they have the information, what fear does to the human being is it makes you look at data and it does not allow you to interpret that data correctly. You will lose your ability to interpret data effectively and objectively when you have emotion and anxiety. It's just simply put. And so there is no better tool to help you as you're in the trade, as you're actually managing that trade and contemplating getting into the trade. In my experience, when I am trying to pick levels to trade in, the the best levels that I have found, if I'm looking to fade a trade, come with the volume profile. I mean, I've used a lot of different indicators. I've used a lot of different systems. This thingamajig line and this arrow and that triangle, and um, when this doji occurs across 3 different charts and the super EMA lines up with the SMA and the VXA crosses over, then go short. You know, I've done those systems. I've just never really made any money. But by following the auction and knowing that the volume profile is a result of the auction, it doesn't tell you exactly where all of the trades are going to be. What it does, just like the order flow does, it tells you on an aggregate basis where the interests are for any given time frame, for any given instrument and participants in that instrument, what their interests are in terms of fair price and unfair price. And when I understand the attributes of those elements, I can use the 2 tools together, the volume profile and the order flow, excuse me, to effectively actually trade. And more importantly, I can use them to identify levels that allow me to manage my risk the best. OFA equals trading crack. I'd agree with that statement. Question, could one use these tools for ETFs, etc.? Um, I'm almost there on this. I'm working on getting this to work for stocks, and I may need some help with DB to get this in my ninja charts to get this to work for stocks. Um, But what I can tell you is it doesn't matter if it's Apple, it doesn't matter if it's IBM or GE or anything. Amazon, it doesn't matter. As long as I can get the volume data and have a tool that creates the profile, I can use what I know about the volume profile and the method of going from outside in to truly effectively trade, or at the very least understand context of any instrument that I can see. Anything that I can see. Because the attributes of the volume profile, because they are a result of the auction, because it's a part of the auction, the attributes and the elements are exactly the same. And every market is an auction. So the profile is just a representation of that auction, of what their interests are, where fair prices and unfair prices are. Just a spread and price scale issue. Well, you can help me through that. I noticed that your MP language does not include initiative and responsive buying or selling. I understand that with the attributes of the elements you use, those words are probably not needed. Is there another reason for the omission? Not really any other reason for that omission in terms of initiative and responsive selling. And here's the rub for me is that sometimes that is a subjective thing. So within the OFA tool, for example, there's responsive and initiating indications relative to each bar. In the overall auction, as I look at the overall auction as a process, say for example within a day, if price is moving up, kind of like what happened in the ES today, as price was moving up. Let me just go back to that point. See if I can show you why if there was, excuse me. Thank you. If there was omission, why it's a little bit difficult to exactly define. Okay, so we had price moving up. We get back up to that point. There we go. And again, I'm just into full control here, so full control mode. I don't want to do anything stupid for the day here now and lose any profit. If I'm talking and trying to trade at the same time, I'm likely to do exactly that. So as price was coming up here and buyers were having a good time, right, and having good progress, this selling right here made a lot of sense to me, right? Buyers become sellers. And as price started crossing over, the previous high, new buying like this is initiative buying. Anything new it's initiative buying. And specifically this buying up here, 19, 10, 25, initiative buying. Because it's the first time at that level. And the first time at that level, you want to understand what's going on. So I can see selling. But when the selling started occurring down here, back down into this area, this kind of went beyond a normal pullback. And to me, this started becoming initiative selling. More initiative. And by initiative to me, and maybe we can define it this way, it's one side or the other beginning, entering, and so the initiative to, initiative responsive has a lot to do with where volume is coming in. If volume is coming into the market, price has gone down, buying volume is coming in, and quite a bit of it. It can be one of two things. It can be buyers really stepping in, or it can be those sellers getting out of their contracts and all that creates buying, and it can be mistaken as initiative. So to me, in the auction, it's not as simple as, and this is one of the issues doing it bar by bar. It's not as easy as you look at the overall context of the market to say, well, if volume's coming in here based on the previous bar, this is now initiative. This is an initiative response or responsive activity. Responsive selling to me comes after prices moved in a long direction or some direction, and based on price, not news, we see a stark and strong reaction in terms of value and effectiveness in price, moving price the other way. That's responsive activity to me. It's based on price, where price is, because the other side sees significant value. Initiative is, are we kind of at an area where there was previous resistance or support, and the other side's getting very active again, and they're taking initiative to move price further in their direction. So that's what I consider initiative and responsive in the overall auction. It's just one of those things. I hate to say it this way. It's just one of those things that takes time in terms of the context of the overall auction to see. Now, from a scalp standpoint, if you're looking to scalp, then the tool within OFA works really well in terms of initiative and responsive buying and selling. But in the overall auction, initiative is new buying or more buying, taking the initiative at an area to move price. The responsive is price has already moved in a specific direction. Now the other side is stepping in strongly and effectively to move price in the other direction. In terms of using level 2 versus level 1 data for stocks, would there be a significant difference in how OFA displays the colors of the data? I'll let DB respond to that. And because I'm not quite sure how to answer that. With Roberto, I was thinking of initiative as equivalent of breakout trade. Yes, initiative trade, a lot of breakout trades, absolutely. Initiative trades, absolutely right. As opposed to the abdication at the edge and moving the other way. Yes, breakout trades are initiative trades. You are so right. And in the context of the auction, I look at breakouts as initiative. That's why breakout levels become really important to me. And breakout levels, you know, on a pullback, that's why I love those so much. They're great re-entries. But you're right, Roberto, and I think you're looking at initiative in the terms of breakouts exactly correct, the way it should be looked at. That's exactly right, in my opinion. Okay, well, we have gone a little over 4 hours today, and we're going to get back together on Sunday evening. DB, do you want to talk to that at all? If you're there? Oh, okay. 6:30 p.m. Central Time, be here or be square. Any homework? Yes, good question. Take this document and fill it out. So complete Friday's session. Enter in this information from today. And then do your commentary and do an analysis based on, at least do 2 scenarios. And you're looking for a scenario to say something like, if price opens up here. So if I were to look at today's activity, let me just see here. I'm getting a lot of activity here in the background. 6E, we'll close that out. Where is my, here, let me do this. Hang on. There we go. So here's my volume profile for the day. We still have a couple hours, 3 hours left in the day. Here's my volume profile for the day. Let's say we get another extension to the upside and price closes up here above the 17 level, up around 20, 21, or 23. What I want you to do is look at this and say, you know, initial move, here's our open right here. Couple of tests down to the downside. A move higher, and if we end above here, you know, in context of everything else that the ES is trying to do, you know, the market opened with thinner data down here. Actually, that was previous. That was the here. You know what? That's my problem. I didn't draw another one here. There's our profile for the day. So based on this profile, and you want to compare it to the previous day and what's happened over the week, this is what I'm reading in the market. 1 test down, 2 tests down. We continue to make higher highs for the day, and if it closes higher, that should instinctively tell you that the buyers are continuing to be aggressive based on the close and where this is. Taking a look at the overall volume profile, you know, if price closes above 17, somewhere around 19, 20 or higher, you're going to start looking for 23. And if it gets above 17 and it tests down and holds and closes somewhere back up here, then, you know, your first scenario should be, hey, if price opens up on Monday morning above 17, this is what I'm going to do. If price closes down into this zone between 17 and 07, which by the way is a 10-point range. I know you guys have talked about that before. In fact, if you look at where this next low volume area is above here, it's at 20, about 27. Market likes to move in 10-point ranges. I know you've heard that from Laura for a long time. So what does that mean? What does that mean to your trade on Monday? If it closes up here, then you should have an if-then scenario that says, if the market opens up above 17, I'm going to look for a long around 1675, 17 area. And use the volume profile for today, and where if it gets above that 17 level, moves higher, the support from today might be at 1775. So make it a range between 1675 to 1775. You want just do it on the ES. Do it on the ES. That's what we'll review on Sunday. So in terms of, okay, so before you go, there is a survey before you leave. And there's the survey. My feelings aren't going to be hurt. So I'd appreciate it if you would be willing to take the survey. And I want to improve, and I know that a lot of information you've had in the week here, it's been a lot of information, but I'm telling you, I will commit to making sure that this is something that you get more of going forward, and not not at an additional charge, but just to make sure that we continue to do sessions to reinforce what you've learned this week and to help you apply what you've learned this week into other instruments. What time Sunday night? I believe 6:30 p.m. Central. 6:30 p.m. Central. Yeah, Wayne, your questions have been excellent. It seems like you've really absorbed a lot. Yeah, I think I'll type my email into here. Here's my email for you. Eat some anchovies for your voice. I've never heard of that. You know, I had a student once tell me about, I used to get sinus infections a lot. He told me about this thing called colloidal silver. And I kind of just laughed and really didn't make too much of it. And I started getting, more sinus infections. And eventually I tried it. And lo and behold, it worked really well. So I from that point on, I said that if I ever had um, something from a student that somebody who I was training that provided information for me, um, I would listen up. I live in Minnesota. Oh, good, Ben. I'm glad to hear that. Yeah, colloidal silver is awesome. Oh, good, Bruce. Thank you very much. We're not done, okay? I want to make sure we're real clear about that. We're not done. We're going to have more Q&A sessions and Sunday night, and thinking about some other ways to provide you guys with information to help cement the concepts. I grew up outside of Chicago, so I'm a Bears fan. It's amazing how those things just don't die. So, but I try not to. I'm a diehard Cubs fan too, so I try not to put too much emotional stock in my Chicago teams because it not good for the heart. Thanks, Carson. Appreciate it. Great questions. Thank you very much. Lars, thank you. Again, we're not done. I'm really hoping you guys are back at 6:30 p.m. Central on Sunday, and we'll go through the homework. And I'm still trying to figure out ways to get you more information. Okay, DB, anything you want to say to close?
Yeah, I just wanted to say thank you. This has really been a fantastic course. I think the poll results show kind of where people are. If you didn't vote, you're not going to hurt our feelings. But we really want to make things as good as possible, and so that's why we ask these things. Anyway, I hope everybody got an awful lot out of it. Mark's certainly given a tremendous amount of his time this week and is committed to things even off the scope. But don't forget, we also have a follow-up next Wednesday so that you can go and take this and put it into action, and then develop some, where you don't have a crutch. So you can meet with us on Sunday night, then trade for a couple of days, watch the market, come back on Wednesday, and then we'll do another follow-up the following Wednesday. So what we're trying to do is make sure that it's not just, oh, I can go back and watch the videos, but that you actually have some interaction. And in general, we just want to build this as best we can. I mean, we want to make sure that that what gets delivered to you is as good as it can be. So if you have any direct feedback for us, you can always email me or Mark. We'd really like to know where we stand with you. So anyway, thanks so much. And Mark, thank you.
Yeah, and I have a note here to get the other templates with some documentation around those. So for some of the other instruments, so I'll work on that over the weekend. And you know, I like to talk to you guys, so they're likely, and DB has never turned me down to have an additional session. Not yet. So I likely will have more sessions so that we can have more discussions. All right, all. Thank you very much. It's been a great week. I look forward to. Someone looks like somebody got into a trade. Up 5 points. Ha! Nice. Ha! Yeah. Oh, looks like 2 people got into that trade. Good job. All right, guys. We'll talk with you on Sunday night. It'll be fun. All right. Take care. Good. Well, I have it as well, almost 6:30 my time. Just about to change over. For all intent and purposes, let's just call this 6:30 and go ahead. There it goes. And get started for tonight. Well, thanks for joining me tonight. And this is going to be recorded, so we'll have this on record. So thanks for joining me. We're going to go through the homework on the ES. We're going to go through a lot of things that we went through last week. We're going to primarily focus on the ES, and I'm going to talk a little bit about reading the print. And just as I look at OFA, and I've talked about this before, because people have asked me, you know, what about thin volume? What about thick volume? What do I do with those? And is it the same? And is it relevant and relative? And the answer is yes. And I'm gonna show you an oil tonight. And I'm just doing this in sim, of course, but I'm gonna show you some things as you start practicing reading the print relative to the volume profile, things that you can start to look at to make sense of all this. So let's go ahead and get started with this thing called our homework. So you have the template for this, and what I do every week is I'll just save one. I'll save my homework as a separate name, and I'll save it for the week. So this is, if you can see up here, this is homework. You can call it ES homework for the week of 8/11, so starting tomorrow. So on Monday, I'm going to start filling in the information, and I'm using the prior session chart date. So this is Monday 8/11. I'm sorry, this is going to Monday. This is going to be Monday 8, and the chart date is going to be from Friday. So the chart date is actually going to be the 8th. Okay, so the chart date is actually going to be the prior session. So that's going to be the 8th. But the homework sheet, this is going to be for Monday through Friday with this Monday's information. So we're going to trade, we're going to build a trade plan for Monday. But we're going to use the prior session date, which is the 8th for Monday. So every Monday using the previous Friday. Does that make sense? That good? Okay, I want to make sure I'm clear with that. All right, so what we're going to do is we're just going to start charting these things. And our open was at 1909 even. And one of the things that I do to start charting this is I bring down my handy dandy chart. I know you have this template. It is just the RTH session only for the ES. RTH session only. So we open down here at night. There's our open right there, that blue line, our open. And our range, in order to determine are we in range, out of range, in value, out of value, we're looking at the previous day's session. So in order to determine, did we open up in or out of value, in and out or out of range? And one of the reasons I have people do this is just to really get a feel for the instrument, to start to understand how often does the ES open up in value or out of range. And what happens? What are some of the tendencies of the ES as it opens up out of range or out of value? And until people actually start marking this and understanding the relevance of it, they don't really get it. They don't understand it. It's not something that they typically mark. So as I look at the previous day and I'm looking at our open here, what I'm trying to determine is, here's our value from here to here. I'm trying to determine, did it open up in value and in range? And the answer is yes. It opened up in value and inside of range. Because one of the things I want to start to understand is, so it opened up in value and in range. Now I want to get a sense, did it break value on Thursday or Friday from Thursday? Did it break Thursday's value? And this is what I'm looking at as I trade. Because if it starts breaking value, then I care about this low. And how far of a test to the downside did it take beyond value if it opened up in value? If it opened up outside of value, then did it try to test back into previous day's value? And if it tried to test back into previous day's value and failed, what did that look like and where was that test to? Because that's a key area for me. So what becomes important for me, and this is for me, and I like to give people this information because to me this really starts reflecting the overall auction. And again, to understand the overall auction of any specific instrument is to understand the overall context of that specific instrument. So I do track whether or not an instrument opened up in range and inside of value. And if the answer is yes, then I really want to see what the characteristics of that open was. Because, for example, if it opened up in value and auctioned back and forth, which this did, auctioned back and forth, and didn't test back down to the value area low, but broke through the top of the value area like this did on Friday, then look what happened on Friday from Thursday. The top of the value area is right here at 1915. And look what happened from 1915 all the way up to this 2025 level. Real thin volume, but this was a clear breakout. This was buyers breaking out and looking for new prices. I mean, this market was in exploration and exploring new prices, and you can see through this back and forth movement, the market gained acceptance up here at the end of the day. Also, the volume profile shows you the market gained acceptance of these prices up here. If they didn't, if these prices weren't being accepted on the ES on Friday, then we would have seen price maybe close back down towards 20, 2075, 21 level, or possibly back down towards the VPOC of the day. Actually, the VPOC was up here at the end of the day. So again, value becomes very important, and I want to understand relative to the overall market, is it accepting prior value? So if the market opened up in value like it did here, 1909, and I started to get a two-sided trading, what I might do in that day is say, you know, it's relatively choppy. If it was choppy in the morning, not giving me good signals, the intraday volume profile wasn't really building out very well, then I might say, well, I want to see what the test is going to be. First test down, second test down, it failed. And then once it broke through the initial balance, I would start looking in that direction. Once you get through initial balance, it's considered range extension. This is kind of setting the table for the day. You get a range extension, I'd start looking in that direction. And beyond the initial balance, which would have been right here, and you can see a little bit of test back down into it, probably a stop run here. Beyond the initial balance, I would be looking for a natural test of the previous day's value area, and possibly up to this low volume area right there. Previous day's low volume area. First one was here at 1550. Second one was right up here. But I would be looking for at least a test of the high from the previous day. So again, value holds a lot of context for me. And if the market opens up in value and it is unsuccessful at auctioning lower, it tests down but cannot get lower, and continues back up at the time VPOC was here for the day, for the morning. And as it started moving up and broke through IB, now I'm looking higher for the day. Does that make sense? Any questions about that? So value for me at the open is something that I'm looking at the previous auction. And remember, this is only the RTH session. I'm trading back in the RTH session. And what I'm trying to gauge as quickly as possible is this market, are these participants in this market the same as they were yesterday? Or are they different? Do they have different conviction levels for the day? And value is a really good place to start. So it's one of the reasons I have it on the chart, and I'm looking for inside or outside of value, and then outside of range. And then I want to understand what it did, inside or outside of that range or value. So I look at it, the answer is yes. Did it move inside of value? Did it open up inside of value? Previous day is over here. Yep, opened up inside of value, opened up inside of range. And so I just put inside and inside as comments. All right, and then I want my opening swing high and my opening swing low. And for opening swings, got to go back to our chart from Friday here. Hang on, I'm bringing the chart up. There we go. And for the opening swing, starting here at 8:30, I'm looking for, there's my open, looking for the initial push up, which was right here, and the initial push down. So this that would be 1907.75 and 1910. And again, all I'm trying to do is understand my context from the previous day. So for example, if tomorrow opens up way outside of this area, then I might not even consider these opening swings as an issue. But what I want to see is if this thing opens up right on top of Friday's open, where Friday was, I want to understand, are we looking at the same potential interest level of these buyers and sellers? Might I have a day similar to Friday? So again, all of this is for me to, as quickly as I can, to try to identify whether or not the participants of this current auction have anything in common with anything from the previous auction. And I'm going to show you another example here. So 1910 and 1907.75. Now I'll tell you, from a trade standpoint, actual trade-on standpoint, I use this opening swing high, opening swing low significantly more at the open than I do the next day. So the relative value of opening swing high and low only becomes relevant for me if the next day is opening on top of this day, the previous day. So if I'm opening in the same area, within a couple of ticks of the previous day, I just want to keep that as reference. I'm not going to make any trades off of this level. I just want to keep it as reference. That's all. So 1910, 1907.75. Remember, my whole goal is to understand the context of this auction and where buyer and seller's interests are. Once I have a pretty good feel for that, now I know whether or not this is likely to auction higher or likely to auction lower. And I can start looking more effectively based on my trade plan at longs or shorts, depending upon where the market might test to in the morning. So one of the things I want to do is mark this 1907, 75, 1910, is I'll just go ahead and put those numbers in. The other thing that this will do for you in any instrument, so whether you're trading oil, the dollar, the euro dollar, forex, doesn't matter, is it will over time, and I believe that people should get very intimate with whatever instruments they're trading. Over time, it'll give you a sense of what is a normal opening swing. And a normal opening swing on the ES is going to be anywhere between 2 and 3 points. So that's relatively normal, a normal opening swing. So if you get if I get an opening swing on the ES that's 4 points or 5 points, something's different. Something's different, and it alerts me to either sit on my hands, be careful, watch out, or it alerts me that we may have a very early breakaway. So I also like to mark the IB high, IB low, and there are a couple of ways of doing that. And really all you're looking for in the IB is the first 60 minutes of trade. So there's a couple of ways that you can do that. You could have tagged it the day before, and this one is from a relative importance standpoint. You can just do a 30, I think I have a 30-minute chart here. You can just do a 30-minute chart and tag your opening swing, your IB high and IB low. So my initial balance for Friday I have as 1911 quarter down to 1903.75. And let me find, I just pulled that off a simple 30-minute chart. I might have closed it. Let me just see. Oh yeah, here it is. Okay. Okay, let me just pull it over. Just a super simple 30-minute chart. And here's my 30-minute for Friday. 1903.50 to a high of 1911 quarter. There it is. That's my IB. And if I set these lines, let me just show you something. One of the reasons I picked this. Look what happened when price finally broke through, and this line, I don't want to say it became support, but I could see as sellers really started failing getting through here that we were going to go higher. And once we started getting volume above this IB, we started getting volume range extension above IB, it's just a matter of time before this started looking higher. So my expectation in the market is that this is going to try to look higher for the day. The only thing that would have changed my perception or perspective of where price might go is if we saw price come back underneath IB, inside of IB, and IB start to become, call it for any better term, resistance. So if I mark these things, and again, it's just the first hour of trade. What are the tops and bottoms of the first hour of trade? And I told this to you before. When you get a low volume area on your intraday profile that lines up with the bottom or top of IB and price breaks out and starts building some distribution above or below, when price retests back towards that IB, probably a couple of ticks in front of it, those are often, as long as the print confirms it, those are often phenomenal trades. Phenomenal trades. So here's another example of an IB. Here was the low. Here was the high. This was Wednesday. Here was the high. And then you could see price breaking out. Price trying to break out. Price trying to break out of the IB. Couldn't. And it wasn't until price started coming back inside of IB, and you can see in this, I'm going to try to make this a little bigger. I'm sorry that I know that these are really small. Let me make this bigger for you. And the reason I'm doing this is because I want to show you the relative importance of this initial balance. And this is pretty specific to the ES. I don't see this in the indexes, so the YM as well as NQ. I don't see this as much as things like on oil, gold, etc. So, and especially for the ES, if this is what you're trading. Again, here is the low of this one, and the high. We'll just get this out of the way, and we'll just call that was a high. So this is the first 30 minutes. Big IB. I mean, this was 05 to 18, so 13-point IB. And you can see once price got above it, it kept trying to go higher, Excuse me, a couple of times it came back down. Now, if this was my IB and my intraday low volume area was here down at 1750, this is where I'd be looking to take my long, not right at IB. Wherever the low volume areas of the day relative to the IB is where I'm looking to take my long. But like I told you, once price starts coming down below and it starts becoming more resistance, the top of IB, now I'm looking and expecting price to move lower on the day. So the initial balance on the ES for me, I mark it because it is another, call it a waterline relative to the overall auction. And usually it provides a fairly good indication, and you gotta keep watching the print. That is your ultimate indication of where price is most likely to go, at least what direction price is most likely to go. So you can see on Thursday, once we dropped underneath IB, likely got a low volume area right here, but never came back up to test for this trade. But with the way that this was extending lower, you would be looking to get onto that trend and take this lower. But the likelihood is that it was going to go further down. So just from a number standpoint, if you like statistics and things like that, then you need to know that 80 to 85%, could be 82% of the time, when price breaks IB, or let me put it this way, 80 to 85% of the time, either the top or the bottom of IB is going to be the extreme for the day. So understanding where IB is, top and bottom of IB is, and where it breaks becomes very important. And if price breaks back up or down through that initial balance at top or bottom, and that starts becoming, call it resistance, if you will, support or resistance, depending upon which way you're going to go, then there's a probability that it's going to go back down. You'd be looking for a trade back down towards the high volume area inside of IB. And if you have a really small IB on the day, meaning that the market may be a 4 or 5 point range on the IB, and it tries to break up higher and can't break, you don't get much range extension through the top. Let's say it moves up, you don't get much range extension through the top. Then if it comes back down into the initial balance and can't get back up through it very well, you see weakness at the offer above it as it tries to get back up, strength in the bid as it's starting to come back down. If it's a really small IB, there is a higher probable chance that price is going to come all the way back down through IB and give you range extension on the other side, and that's basically called a neutral day. But that's relatively significant. If price, it means that one side took off, had conviction in the auction, and tested higher, and the other side with conviction pushed them back down. And then what's important is, where does this thing end? If it ends inside of the range, the primary range for IB, that's telling you that there's likely acceptance here, and you could probably look for an open somewhere in range, et cetera, et cetera. But all of this that I do and everything I'm here sharing with you and that's in the homework is to identify the relativity of price and activity between buyers and sellers in the auction. Everything that I do is to gain some level of understanding of what is this market trying to do and how good of a job of it is it doing. Yes. Roberto, you said, I have seen that the IB usually gives you one of either the high of the day or the low of the day. Yes, that's what I mean. When I say 80 to 85%, either the high or the low of the IB is going to be either the high or the low extreme for the day. So when you get range extension, meaning beyond IB, knowing that, say, 80% of the time, you're not going to see the bottom, and the bottom is likely going to be the extreme of the day. That's why I look for a retest back to a low volume area. And if that low volume area is somewhere inside of IB, that's where I'm taking my trade in the direction of the range extension. Yeah, I can. It's a high percentage of the time. It's upwards of 80% of the time. Now there may be days. For example, there's an old saying, and it typically runs relatively true, which is neutral begets neutral, and that means when you have one neutral day, it means the market's somewhat in balance, and you're likely to get another neutral day behind it. I've seen up to 5 neutral days in a row, and I will also tell you that in 2013 and 2014, you can throw the word normal out the window because, especially on the ES, there has been nothing relatively normal, which is why most people who trade with quote-unquote systems have not done really well for the last year and a half because the market has not been trading normally in most systems, and why trading the auction and understanding what the market is likely, what it's doing, what it's trying to do, how good of a job it's doing, will tell you where price is most likely to go. All right. So and I can check the stat. The point of what I'm telling you is, and why I check my IB and why I market during the day, is because the probability in the statistics is that it's a high percent of the time. So when price breaks IB, and again, I need you to put this in context of the volume profile and what I'm teaching. When price breaks IB, and let's say let's say price tested down in the morning, and I got strong responsive buying, so strong activity in the print on the offer as price was moving back up, and it started testing down again. And as it tested down, I could see the weakness in the bid coming in, and once again, strength in the offer coming in, pushing up through the top of the IB. There's a lot in the overall context that I'm reading that says buyers have conviction. They're likely looking to take price higher. So if they're going to take price higher, and I don't really like to take breakouts a lot, I'm going to look for a logical pullback before I take my long. So my context is one test down, second test down. The second test was a higher low, and I could see weakness at the bid, strength at the offer. We're breaking through the top of IB. I've got a low volume area, maybe a point and a quarter below IB. I am waiting for a test back down to that intraday low volume area, and then I'm going long. Because not only now do I have the context on my side, but I also have the higher probability that those two tests to the downside were likely the extremes low of the day. So I've got a context for a really good trade. And because I'm waiting for the pullback in the low volume area, even if price does come through my level, I know where I'm wrong, right? So I'm trading up against that low volume area. If price comes through, I'm out on the other side of it. Yeah, and so that's the context of the IB and why I have it in there. So I mark that IB, and again, it's a really simple 30-minute chart. That's really 30-minute bars. That's all this is. And once you have that, you can identify it. The other thing that I will tell you is if you have, and I could put something in here that actually calculates the spread on the IB. If you have a spread of an IB larger than 5 points, that's above average. When you get like this 8 points, or like we had 13 points on that day, that's a fairly significant IB. You know, if you're looking, say if you get over 7, 8, it's getting pretty big. If you've got an IB 3, 4, 5 points, and you're going to start seeing this in the last 3 weeks of August, you get IBs of 3, 4, 5 points. You need to understand it's like that opening hour on the ES is like setting the table, and the base of that table is really, really narrow. It's really, really small. That table can get tipped very easy. So the likelihood of range extension is significant if you've got a really small IB. And like I talked to a couple of times last week, and I don't expect that you would have remembered this, but when I'm looking at IB and I'm looking at a break of IB, and this is typically why I take a retest, either long or short beyond IB, is I am always looking to see, does price move 1, 2, 3, 4 ticks above or below IB, show me a finish, let's say it goes 4 ticks above IB, show me a finish on the profile and weakness at the offer and strength coming in at the bid, I'm not interested in going long. What I need to see, because I'm really looking to trade with those buyers or sellers, what I need to see in the volume profile and in the print, they have to jive with taking price higher. So if I see continued strength in the offer above IB and relative weakness, and as it pulls back, and this is kind of an interesting thing, if it pulls back and I see on the bar on the probe down, I see weakness at the offer, and moderate strength at the bid. I mean, the likelihood is the color is going to be red, but the numbers are moderate. They're not large numbers at the bid pushing price back down. Then that gives me even more confidence in a long on a pullback to a low volume area on the day. And the reason is because what is likely happening in the print, it's not that the buyers are all of a sudden getting real weak. It's, in fact, if I saw strength at the offer and then strength at the bid at the top of this with somewhat of a finish and price coming back down, I might not take that long off the low volume area. I might get an initial bounce, but that tells me that there are significant sellers that have conviction up at the top. But if I see weakness in the offer as it's descending and coming back down to that low volume area, that just tells me that buyers are likely managing their inventory. They brought price up, they're letting go a little bit, and I'm looking to go long back at that low volume area. That's just a little bit of nuance. Of course, you got to really watch the auction and see what's happening. The print is always, always, always your source of truth. The print is always your source of truth as you look to enter your trade, because that is the most current context relative to buyers and sellers. And again, once you click that button, it's those, especially after the first couple of minutes after you click on the button, it's those buyers and sellers that are going to start either supporting your trade and giving you some confidence in the trade, or it's those initial buyers and sellers are going to start messing with your psychology and start telling you something different. So that initial push or the initial auction after you get into the trade becomes very important. So I put in my IB, and the IB is meaningful to me. You know, if I get 6, 7, 8 points, that's typically average. If I start seeing an IB above 8 points, something's going on. If I see a big IB, I'm looking at the profile. Is the profile relatively broken? Is it starting to build out and give me high volume areas, maybe 2-point high volume areas, but starting to build volume as it goes up? That could be the sign of a trend day. So then I'll also put in the close for the day, and the close for Friday, one second, I think I had the close at 23.50, and I can use this chart right there and see my close at 23.50. So I put my close in at 1923.50. Now we know the close is important because there's a lot of quote unquote fill the gap opportunities, and if price opens up and starts moving back towards the close, there's a high percentage of the time, and I would tell you that percentage can be disputed, but there's a higher percentage of the time that price is going to attempt to fill the gap to try to hit that close, that settlement prior to moving in the other direction if it's going to move. So it's a good test area. And then I want to know, was it in or out of value? When it closed, was it inside or outside of value? And this is value. All this in this yellow is value. So it closed higher. It closed in value to the high side. And so what I will put for me is just a note, inside high. and all I'm doing is saying it closed inside of value and it closed to the high side. Now, if it closes outside of value, right, typically what we're going to see is, depending upon the day, but typically you're going to see not as much white. This profile is white on the edges and value is yellow. Not going to see too much white, but that's a pretty significant story or end of the story for me. If on Friday this closes outside of value, what it typically means is at the end of the day, instead of all this buying resulting in end of day, especially on Friday, selling, no sell-off, that they further pushed up into the day and closed out higher, which shows me strength. And so one of the things that's important is I want to look at the auction on Monday, and if I can see relative strength at the buyers, then some of the locations that I have chosen below for potential longs, if I have a good print that shows me a long, I'm going to have more confidence in that long. So where it closes relative to value is important to me. Closing swing, again, that's the 2500 chart. I had that marked at 23.25. I'll go through that here. Let me bring that over. If you hear any noise in the background, it's my some of my kids. Friday night or Sunday night having a little fun. All right, where's that 2500 chart? There it is. So let's go ahead and mark the, show you how I mark the closing swing for a day. So here's the end of the day, and price was moving lower, lower, moved down here right before the end of the day, bumped up, tested down again. After the close, tested up to 1926.25, did it a second time, and couldn't get any further. This is the closing swing high, 1926.25. Or this is what I'm marking as my closing swing high, 1926.25. Don't know why it does that. So then I look and I see where did it test down to before the end of the day. There was the end of the day. It tested down to right there, 23.25. So that was the final push by sellers. And now a lot of people that I teach this to, what they don't get, remember, I care about the last push by buyers and sellers. Why? Because when this market opens back up, I want to know if there's still some conviction level, if there's some relative importance around these numbers to the participants of the auction. So you'll hear me say that oftentimes when the market opens back up, these numbers, these closing swing high and closing swing low numbers, not all the time, and again, the print has to prove it, but a lot of times these will have relative meaning to the auction. I mean, you can see what happened today. Just as the market opened tonight, where did it bounce off of? Bounced off of 23.25, right? It came up through closing swing high. This is tonight when it opened Sunday. Moved up 29.50, moved back down to 26.25, and off of 26.25 was a 1.5-point trade. Now, I'm not suggesting that you trade off of this, but it's an opportunity. And you can see that right now, both of these levels have meaning to this market. Why close and not settlement? I have just found that closing price is very consistent as a target. And that may just be because a lot of people use it, but that's what I use. In my experience, that's what I found to be the place where price tests to the most. Yeah, and DB is right. If you look at a daily chart, previous day's close, equals settlement. If you look at an intraday time series, it'll give you a close price instead of settlement. And I just want you to know I use the close. And the reason is because in my experience, the market the next day will look for this number more so than that settlement number if it's different. So that's what I use as a target area. And if price comes down, I'm looking to see what happens around that close settlement. I'm not saying it won't hit settlement. That's just a number that I use. Would I use the same volume chart for the 6E and 6B? Absolutely not. The ES, in fact, at night here, because the volume is significantly less than during the RTH session, this Sunday night is about the only time that I would recommend knocking this down to about a 1200 chart. I would cut this volume in half. But if you're looking at like a 6E chart, and I have to go back and look at the average volume at the open and at the close. And remember, in just about every auction, doesn't matter what you're auctioning, if there's a time frame to it, meaning a start and a finish, start and a close, beginning, close, the majority of the volume, let me put it this way, where you'll see a volume spikes, a lot of bids, a lot of offers coming in a short amount of time, is at the beginning of the auction and at the end of the auction. I don't care what you're auctioning. That's typically going to be the case where there's a flurry of activity up front and a flurry activity at the end of the auction, which is why I mark the opening swing and the closing swing. So I'll make sure I answered that question. So again, IB is important. My closing swing is important. You can see this bouncing off this area right now. I would just tell you, based on the volume profile for this evening, this looks finished, somewhat finished to the upside. I wouldn't be surprised if it starts testing down through this closing swing high and possibly all the way back down to the closing swing low yet tonight. But you know, right now this is still a low volume area, and the print. We'll get to the print in a bit. Anyway, so to complete this chart, closing swing high again was 26.25. Closing swing low using that 2500 chart was 23.25. And I put in, this calculates the closing point range, which is just gives me an understanding of how big that swing was. How big was the sell-off at night, the night before, if there was a sell-off. And I want to see if, again, that next morning, do I have the same kind of conviction level based on where price opens? Because if we had a big sell-off at the end of the day and that closing point range was 5-6 points and price is opening towards the bottom of value, that would tell me the overnight session still is short-minded. It's accepting price down here, and I might give a little bit more weight to a short trade at a test, expecting some level of test higher. Let's say I pick a low volume area above. I might give more weight to that short trade. Again, the print is going to tell me whether or not to get into it. But you know, my read on that would be we have consensus overnight. We're getting acceptance here. I would look above at my low volume area. Where's my trade? And look for that initial short trade. And as long as the print gave me the confirmation, then I would get into that short trade. Again, you still have to watch it and manage it because every day is different, as you know. And what buyers and sellers are doing one day will and can be completely different than what they're doing the next day. So price high of day is pretty easy, right? That's just this high at 28.25, and this low down at 03.75. So I can see by my numbers that there was a fairly significant range on Friday. 2450 is big. It's a big range for the ES. And I can also see that my open and my opening swing gave me about, what, 2.25 points. So at the open, there wasn't a lot of activity. There wasn't a lot of movement up and down. And from my IB, I can see about 8 points, so a little above average. So we had significant range extension on the day, right? 2450 minus the 8, about 8.5 for the IB, significant range extension, and we closed inside high of value. So just looking at these numbers tells me that there was acceptance of price higher. And then when I add these other numbers, high of value is 28.25. Low of value is 10.25. And VPOC, otherwise known as VPOC, 1926.75. So just looking at these numbers, if you didn't even give me a chart and I just looked at these numbers, I would be able to give you a story for Friday. And that's what I'm looking to do, because here's my experience, and this may not be for everybody. Here's my experience. When I actually take the time to write these numbers down, I got to go back and I got to look, okay, what was closing swing, what was opening swing, what was IB. It's a pain in the butt. Okay, none of this is really easy to do. It gets easier to do and it goes a lot faster, but it's a pain in the butt. But I can tell you, nothing else for me has ever provided for me the overall context of the market, like plugging in these numbers and understanding what these numbers mean. And so when you get to the point where you can tell a story just from the numbers as to what the market was trying to do and how good of a job was it in doing it, I will tell you that if you can do that, and when you can do that, you have a really good feel for the instrument that you're trading. If the numbers are just numbers and so what, I'm just doing it to plug the numbers in. If they don't have meaning to you, then the exercise is kind of in vain and you won't get out of it what the value of actually going through the numbers are. So the next thing I do is I go through the volume profile and I start completing this chart. And so again, what we're doing is with the homework. And our goal here tonight, I probably should have started with this. Our goal here tonight is to go through the homework session, how you actually complete the homework. We did a little bit of this on Thursday and Friday, and so I wanted to go over it again. And then how to take this information and translate it into a trade plan for the next day. And then in the morning, looking at your trade plan, looking where price opens up and the scenarios that you've built, and then making a decision in the pre-market relative to the context. Again, very important time, 7:20 a.m. Eastern to the open on the ES. You almost want to do a separate volume profile just for that time. Compare that to the overall overnight and see if the overall sentiment is changing from the overnight. So what I do is I go into my daily. I put my close in right here. So the close again for Friday was 1923.50. So I'll just put that in, 1923.50, and you can see it changes down here. And so what I want to do from the close, and this is my most current context, so I go to daily. From the close, I want to know where my low volume, high volume areas are below the close and above the close. So here's the close, and you know, if you want to call this, the high volume area really is up here at 23.75, and then volume point of control above. So we can say 23.75. I'm going to show you why we use these numbers. And then volume point of control up at 26.75. And then below, I want to understand where are my high volume areas. And I have one here at 1913. And I have one a little bit lower down here at 1906. So this is pretty easy, right? Relatively easy just to find your levels and pop them in. Same thing with the low volume area. So there's clearly a low volume area right here above at 2450. So above, I just want to type in 1924.50. And we have a low volume area right here that has some relevance at, say, 20. Low volume area is at 20 and a quarter. So I'm going to put 20 and a quarter in here below the close. And what's interesting now is we have basically a range. What you could do is you could put in 1825 and you could put in 15, but we have a range of low volume from 20 and a quarter down to 15. So the way I typically represent that is I will say 1920 quarter to 1915. Now remember, the context of just plugging the numbers in tells me that buyers got conviction, and they got conviction after IB. They never relented. They never let go. Sellers could never, they tested back down to 2050 twice. They could never get enough conviction to take price back down, so we closed higher. So for Friday, doesn't mean that Monday will be the same, but for Friday, the relative context for the ES is that we have buyers engaged, and they engaged here at 15, and they held back here at 2050. So this range becomes very important for me for Monday. And if price starts dropping through 2025, that's fine. Comes through this low volume area, 1850, right? Because it may stop right there. But this is more significant because this is where buyers got engaged again, right at 2025. So if price on Monday starts coming through this area, I'm fine with that. That's fine. It is what it is. I likely would not trade in this low volume area because once it breaks through, I can see the activity by the buyers. Buyers had a lot of conviction through here. And at any point beyond this low volume area here at 20 and a quarter, at any point these buyers could re-engage. So I'm not interested in trying to take a short down to here and a long back up here. What I'm interested in seeing on Monday, if price comes back down below 20, is I want to see how far they will let the sellers go. Will they let the sellers come all the way back down to 15? If so, that might be an area of trade for me. I will definitely look at the print, be looking at the print around 1550, 15 quarter as price, if price comes back down here. And so I can already tell you that as part of my trading plan is if price opens up above this level at 2050, 20 and a quarter, I'm going to be looking for a long on a test. If it opens up here, I'm going to be looking for a long off a test of 2050. So if price comes down 2050, 20 and a quarter, price comes down and the print suggests to go long here, I'm taking the long. If it comes through, I might decide to put my stop right here at 1950. I might give it very little room. You have to know that the ES will, especially early in the morning, there'll be stop runs. It'll test, it'll come up, it'll drop, and then pop back up. You know, take out stops and pop back up. And you just can't avoid that. There's no way you could avoid that. The only thing that you can do is you get into the trade at 2050. If you see strength coming back into the bid, you get out. And one of two things are going to happen. You either we're going to get stopped out anyway, or this thing is going to stop and turn around, or it's going to keep coming likely all the way through. If it starts really getting any volume back into this range, it's likely coming back through and testing 15. And you don't want to carry the trade that long anyway. And so the trade relatively, I don't want to say it's easy, it's objective. You're looking for a long when the print tells you to get long at 2050, 20 and a quarter. As long as the print tells you that, right? Print meaning you have weakness at the bid and strength coming back in at the offer. And especially if it's early in the day and the volume profile shows a finish, shows a tapering of activity of volume to the going away, and you get that weakness at the bid, the strength at the offer, you take that trade as close to this area as you can. If you start seeing strength coming back into the bid, you can just get out of the trade at break even, minus 1 tick, 2 ticks, whatever it may be. And it may only tick down 1 or 2 and pop back up. But the point is that you can recover from a 2, 3 tick loss relatively easy, because if it pops back up and you start seeing weakness at the bid, a lot of strength coming back in the offer after a little check down, you can just get back in. You're only down 2 or 3 ticks. So that's one way of managing your risk. I mean, it doesn't prove anything by being willing to hold a trade for a certain amount of time, because here's what I want you to understand. If price comes through this area, it might turn at 1875. So this is the way you got to look at it. If the print tells you to get in at 2050, 2025, and you get in that trade, what you have to be able to do is say, I am willing to carry that trade down through this low volume area to 18. So you have to be able to say, I am willing to carry this trade 2.5 points. And for me, especially early in the morning, that's too much. I'm willing to take a 2 to 3 tick stop. If it stops me out and a lot of strength comes back at the offer, weakness at the bid, and it pops up, that's okay. I don't care. That's only 2 or 3 ticks. I can get back in, because the probability here is if this level holds and buyers actually do step back in this area, that price is coming back up here, possibly back up through VPOC, especially if in the morning we get high volume area up here. Price opens up here, we start getting a good amount of volume back and forth, and it finally tests back down to here. I don't care if it takes me out at 2 or 3 ticks. I really don't. But because I'd rather get taken out at 2 or 3 ticks and have it pop back up and get back in, than for me to say I'm carrying this trade 2 points. Or worse yet, if I don't know really what's going on, right? If I didn't know that if price comes down, say to 1950, it may turn there. It may turn anywhere in here, and that's the whole point of this, is you don't know. And buyers have shown strength all the way up through this area. So they could take it down to 1875, they could take it down to 16 and step back in. But I do know that they've shown strength all the way through this area on Friday, so they could step in anywhere. But if it starts coming down through, I want out, keep my stop tight, because it makes sense from an auction standpoint. And then if it comes all the way down, back down to here, I'll look for the print to confirm a potential trade. If it does, I'll get in long. And what I'm going to start doing now is, because of this weak structure, my expectation is if price comes all the way down here to 15, that it is going to spend, especially if it started up here. If it starts up here and breaks through and moves all the way back down to 15 level, my expectation is that it is going to spend time between 15 and likely 20, maybe even 1850, 20. So I'm not going to hold for VPOC, right? I'm going to look to get, if I got stopped out, I get long again. I'm looking to get my loss back and then some. So I'm going to start looking right about the middle of this range, around 1775, in front of that low volume area right there. And I'm going to look to start scaling. And if the print says weak at the offer, strength at the bid, I'm going to scale. I'm going to scale, because my expectation now, especially if the market opens up here and drops back down into this weak structure where the buyers had conviction on Friday, and now they don't, because we're starting to build volume and we're starting to get two-sided trading. If that's the case, now this is a good trade still, but I'm going to start looking to take some off here, potentially back up here. I need to see strength back at the offer above this level for me to start having confidence in this target. Does that make sense? Okay, good. Again, what I care about in the way that I trade in everything is the only thing that I know is that I can't control price. I can't control price after I get into a trade. So my best way of trading, my best opportunity to stay successful in the long term is to make sure that I'm trading in areas where I know I'm wrong, because I can only manage my risk. I can manage my profit as price moves in my direction, but the one thing for certain I can manage is my entry and my risk. So if that's the case and that's all I can manage, then I need to put myself in a position of being able to manage those things best. And that's really the strength of the volume profile. And when you combine this volume profile with the overall print, being able to see, let's say you're looking to go long at a low volume area, and you can see in the print that the bid is getting weak, and you can see the strength coming back into the offer. What more do you need? For a trade opportunity. Again, there's nothing to say that you get into that trade and the offer isn't going to get weak again and strength coming back in the bid. But at least now if strength coming back in the bid, it automatically tells you there's risk. And you're looking to your downside or upside to say, what is the potential risk on this? And if it gets here, I'm out. And you've effectively been able to manage your risk. Make sure I got all the questions. And I appreciate that feedback, DB. Massive research shows that and agrees that handwritten work will always provide a much deeper memory of repetitive work like this. Suggest printing 20, 30 sheets of the template and handwriting the values each day to maximize your effort. I would agree with that. I would totally agree with that. And I can't stress that enough. The only thing that I can tell you from my experience, and I've taught hundreds of traders, and I've said this before, the only difference between those that make it and those that don't is that those who make it are willing to do the things that those who don't are not willing to do. And that means take the time to understand the context. Take the time to understand where would your best risk reward opportunities be based on what buyers and sellers are already telling you. Don't listen to anybody else, but get really good at listening to buyers and sellers, and you'll be able to effectively manage your risk, identify areas of opportunity, and trade into profit. I could not stress it more. So once we have this data, go back to this. I start plugging in these numbers. There's a low volume area range, and I'll put the whole range in, 1920, 25 to 1915, down to 1915 level there. And then I'm looking lower, to see if there's anything else in terms of a low volume area. Now, I want to be really clear about this. There is a low volume area, a little harder to see on this chart, but there's a low volume area right at 1910. Right there, 1910. What I'm looking for is a low volume area that not only is a low volume area, but is relatively holding price on one side or the other. So I can see as price tested up, it came back down. It came through a couple of ticks here. It came through even more here to the top of IB and came back down. And then when price fired above it, it held to the upside. So what I'm looking for, and I need to make this really, really clear, is I'm not only just looking at low volume areas, I'm looking at price action, and I'm looking to see if the price action confirms that it was a fair or unfair price. When price is below it, did it act like an unfair high? Meaning, did price come off of it? Yep. Price extended a little bit, but came right back down. Once price got through, did it act like an unfair low to buyers? Meaning buyers got engaged? Yep. So this area right here at 1910 is one that I want to mark. 1910. Right there. Does that make sense? Okay. Why do you think the VPOC is printed at 2675? The visual of the volume looks to be at 2375. My VPOC is a yellow line, and it's right there at 26.75. And my visual, actually, if I put my line, my vertical line up against this, I can look straight down, and there is no higher volume area. That's it right there. There's no higher volume area than that at 26.75. So, and again, the other thing is I trust the software. The software hasn't failed me, so it does a good job of, but I can physically see that that's the highest point of the day, most volume right there. So when we're calculating low volume areas, like this 2450, I'll go back up to 2450 right here. One of the things I want to see in this, and I will tell you that this move to the downside and the close below 2450, I can see unfair high, unfair high, unfair high, pop through. See this bar right here, 2450, unfair low, pop back up, then finally came through. So 2450 on Friday was it was a valid low volume area. However, it's going to be a number that's going to be in my trade plan, depending upon where price opens. It's going to be one that I'm going to pay attention to on Monday. The reason is because the most recent activity I have between these buyers and sellers told me that this was an unfair price, and they even acted that way. If I go back into the print and look, I'll look at this number 2450. I can see it here in the structure chart. I'll see strength coming back into the bid, strength coming back into the bid. I can see the momentum dot right here. They took price through, comes back down. What I'm likely here to see is weakness at the offer. Weakness at the bid, strength at the offer. Bring it back up to a new high, and then at the end of the day, I'm going to look at that. I'm going to go back and I'm going to look specifically at the auction as it came down through 24.75 or 24.50. So again, I look not only at the low volume level, I'm looking to verify that buyers and sellers in fact saw it as an unfair price. Meaning when price is below, was it an unfair high at some point? Yes. Was it an unfair low? Yes. So what that means is if I have a low volume area on the day, and price, it's still a low volume area, but price is just flying through it, back and forth, I am giving less weight to that low volume area than one that shows that it was an actual unfair high and low by buyers and sellers. I want to be really clear about that. It's a very specific distinction, because I'll have days like this one. You can see right here. Let me open this up a little bit more. See this low volume area right here at 1906.75? This is really, really close to a, in fact, if I bring it down, let me see if I can find that chart. Yeah, right here. Look. This is a longer term volume profile. Look where this level is, right here, 1907. You could actually make a case for 1906.75 right there, right? So what this is telling us, and this is another example of this message I gave you, if you look at this volume right here, in the morning, VPOC was sitting at 1906. The long-term volume profile showed a long-term low volume area at 1906.75. And whenever, this is a general rule of thumb for me, and I have learned the hard way to objectively just sit on my hands when this happens. When I have an intraday high volume area that is sitting within 3 or 4 ticks of a longer term low volume area, I'm expecting there's a battle going on. There's a battle going on, and whoever wins this battle is likely going to win the day. So you can see this high volume area, this low volume area, right, and it's sitting right on top of a composite or a longer term low volume area. I mean, look at this thing. And there were a couple of cases where price opened, came down to it, bounced, gave us activity to the upside, then came straight through. Came straight through the upside, came back down, came up, bounced off of it, came down again. I'm not I'm not putting, for this day, I'm not putting any stock into that low volume area because price is not proving. Buyers and sellers, even though it's a low volume area on the day, buyers and sellers are not proving that this is either an unfair high or an unfair low. Okay? So what I won't do on this chart, it's a low volume area, but it didn't act like a low volume area. So I'm not putting it on my daily chart. It'll be on my long-term chart, but not my daily. So once I've got my daily chart done, and I've got low volume, make sure I've got my low volume areas above. I've got this 2450 marked. The other thing you could do, I mean, theoretically, not even theoretically, literally this was a low volume area, 2850. You could put 2850 up there. I'm really trying to pay attention to those areas where it actually auctioned through. This looks a little less finished to me up here. But anyway, you could do that, but I typically don't. So these are the numbers for the day. Now, when I look at midterm and, hang on a second. We'll probably go another, I'm almost done. Probably go another half hour and then get through the trade plan and we'll be done for recording. So what I do then is I start popping in these midterm, long-term. Now, for the sake of midterm versus long-term, I've talked about this last week. What I'm looking at are these swings. So from 8/1 to Friday, end of 8/8 is a midterm chart. I really care about this activity because this is high, low, low, high. I care about this activity all the way up to about 37. So this may be another profile that I draw, right? And let me just show you how to do this. So what I'm going to do is I'm going to draw a separate profile right where this crosses underneath here from this price on through where we're at. And what I'm looking to see is, does this line up with everything else? Yep, that's a low volume area, high volume area, low volume area. Good, good. And I can put these numbers in my midterm. Right? I can call this last week a midterm chart. I can call this a long-term chart. Now, if price starts dropping below, 18, I would say if price starts dropping below, man, if it stays below, I'm sorry, if it ever starts getting below 92, 1892, and if it starts staying below 1892, we're going to have to look at a lot more data for a longer term chart because we're going to have to go all the way back to April and May to get that data. But price has been up here, so these are our charts. Again, all I'm doing is looking to confirm these numbers are the same. So all I'm doing is taking this chart and I'm plugging in these numbers. Okay, high volume, I'm marking them high volume, low volume, high volume, low volume. So if I look here, this is 17. You'll see this, and I need to drop this. You'll see 17, 1725. I need to drop this down. So what I'll do is I will just, and I'll copy this, and I'll paste it back down here. And then typically what I'll do is just, these haven't changed, so I'll copy and paste these below. And same thing with this. I just need to put this, now that the close is above 17, I need to put that above. So again, everything is based on the close, because this is going to be kind of the center of my, looking at the profile and using the close is going to start to become the center of my trade plan. So I do that. I make sure, for example, this is all good, 2450, 3375. These high volume areas are good. These need to come down, and long term, I'm looking at 23.75, 33.75. So I'm going to change this, get rid of this one. And I want to make sure that I go even higher. So beyond that, I have 52. There's one here at 48.75, and I can see price dancing around it. So I'm going to put 48.75 and then 52.75. Well, I guess I can only. Now I only go up a few. You can make more rows if you want to. But here's the point: is I want to try to understand where my high volume areas and my low volume areas are above and below close. It should be 48.75 too. And so here, basically right now, this should be the same. There we go. Those are all the same. And when we get into an area where, we're back down 18, 17, 1600s, there is years of data that'll come into play for long term. But right now, long term, midterm are relatively the same. So I'm looking for areas of confluence, specifically with the day. So if I can see on Friday, 23.75, right up here, high volume area, and then 26.75, what I'm going to do is I'm going to say 23.75 to 24.50. Now, what that does for me is it says, this is where I am looking based on the context of the long term and Friday's prices. My expectation right now is that we're going to get volume in this range. Doesn't mean that we will, but this starts to set an expectation for me. If we don't, if price opens up here and volume starts growing down here, that immediately tells me something is different. Something is different from what happened on Friday. And that may cause me to start looking lower for prices, depending upon what happens with the IB and so forth. Or at the very least, it's going to make me look at my trade plan. And for example, if I have a trade that says go long at 15 and the print identifies that, and I have a low volume area that has some confluence around that, I'm going to go long at that level. So again, if something is different than what this is telling me, these convergence, these confluence levels, I'm going to start looking at my plan, looking at the day. What is this thing really trying to do? If price opens up and we get volume between 23.75, 24.50, possibly even higher, then what that's telling me is Friday, okay, we're getting acceptance higher. Buyers may not get much through 28, but if they do, where am I going to start looking? Where am I going to start looking for price to go? What's going to be if I get volume higher and acceptance, what I want to know is where is price most likely to go? And in order to get that, I'm going to go back to my volume profile, the longer term volume profile, and identify where my high volume areas are or where my low volume areas are. So above this level, I'm going to start looking at this 30, looking for price to go up to 30. So if I get acceptance up around this area, I'm expecting a test to 30 where I might look for a short. So now that I have all this data, now I can go back to my trading plan, and the first thing I do is I give a commentary for Friday. And this is my read on Friday. And this is what starts my trade plan. Just close this up here a little bit. And this is how I translate turn all the data into a trade plan. So on Friday, very large range. And I tell myself the story. I would keep the question after adding the last 5 days volume profile. Would you still keep 675 as the LVN? I would keep an LVN at 7, right around 7. It's right between 7.25 and 675. I think if you have it at 1907, you're going to be in good shape. That's where I would put it, because the print is really going to tell you where to get in that area. Yep, you're welcome. So I'm looking at the day, and this is the other thing I told you about, which is volume. Volume was about 300,000 less than the day before. So very large range for the day to the upside. And you don't have to get specific. Was it 23 points in all? 24.5 points in all. So that's great. That tells me we got a lot of buying, closed higher in the upper part of value with VPOC, excuse me, with VPOC at 26.75. Help if I put a 9 there. So that's all great, right? Very obvious. So what about this story? What about this day? The day opened with two-sided trading. And what I want to make note of is with a high volume area within 3 ticks of the composite LVA at 1907. Now, if it looks like I'm just narrating the day and it's easy to do that, then good. You're seeing exactly what I want you to. It's easy to do this. Now we also have IB marked, right? And we can see once price got through IB, it moved higher. So I'm going to say, what I'm going to say about that is significant, if I can spell it, significant range extension to the upside. So what I'm doing is I'm making a case that says, man, buyers were in control. They were really strong on Friday, really strong on Friday, all the way through the day. So significant range extension to the upside, with, again, price closing higher. Now, there's a couple of aha here for me, a couple of things that I'm very interested in, which is, number one, as price closed for the day, it dropped back down and closed, I gotta open this up a little more. It closed lower. It closed below VPOC, and it closed right in the bottom middle of this upper distribution area. So what I'm going to say is there was selling to close the day, to finish the day, and that inherently tells me that all of this buying, there was some skittishness here as they bailed out of their contracts to close the day. This wasn't all of a sudden sellers stepping in at the end of the day and pushing price down. This was these buyers getting cold feet at the end of the day. The other thing, also, there was about 300,000 contracts, less contracts traded on the day. So then what I'm going to do is I'm going to say the low volume area of 1910. Well, actually, I'm going to talk to this a little bit more. I'm going to start up here since this is where we are. 2450 of 1924.50 proved to be an effective low volume area until the end of the day, where buyers relented and price came through. That's important for me because remember, that's the last sentiment of the RTH session on Friday. And some of it may have to do with the end of the week, et cetera, but I need to mark it. So 2450 did prove to be a decent LVA for me for the market, and I want to pay attention to that. Next, there was this range of 20 and a quarter down through 15 where there was weak market structure. So as price moved higher, there was weak structure, market structure between, again, sorry, 20 and a quarter and 15. Weak market structure between 1915 and 20 and a quarter. If price moves below 1920 and a quarter with volume, meaning that we can see activity more at the bid, the intraday volume profile going below 20 and a quarter, then I will expect, or I can say look for price to continue down to 1915. So what that means is I don't really care about a trade. I really don't care about taking a trade in this area. And might I miss a trade at 17? Absolutely, I might miss a trade. It could hit that low volume area at 17 and bounce off of it and go. But what I'm going to look for, if it bounces off of this low volume area at 17, this composite low volume area, and starts moving up back above 2025, I'm simply going to wait for a retest. Because the likelihood is if there was a test down to 17 and it pops back up above this 2025, there's probably going to be a test again down into this level where I'm going to look to go long and I'm going to have a great trade. All right, so down to 15. The next LVA below this was, and that was going to be right here at 1909.75. Okay, so I'm going to make this red, and these are going to start to become the numbers that I care about for potential trades on Monday. So now what I'm going to do is I'm going to say if price opens up, my first scenario, if price opens up above price was close here. If price opens up above this 2025, price opens up above 2025, I will look for a long if price tests down to this level. If price does not test down to, level, then, remember I'm building if-then statements, right? This starts building my trade plan. What if price doesn't test back down here? What if it opens up in here and it doesn't test back down? Then this level, 23.25. I'm going to watch what happens around 23.25, which is where the end of the day was, the closing swing low. Then, and I'm just going to say watch, and here's why I'm just going to watch it. Because anything can happen around this thing, and it could bounce off. There's close right above it. It could bounce off of this, and if there was a finish to the downside on the profile and the print told me to get in, maybe I would take this trade. But I want to watch it because in looking at this, and this is where it ended, so it might be a great trade, and some of the information in the overnight is going to help. But this is the area right here where buyers got aggressive again several times. 1, 2, 3, 4, 5, from 21.25 down to 20.50. Buyers got aggressive and they held firm. They said, this is where we see good value down here. This is a good buy down here. So where I really would prefer to take that trade is down here at 20.50. The other trade I would look to take is if after IB sets, so if price just rotates up in this area and we get high volume up around 25 to 26.50, somewhere in this area, I'm likely just going to sit on my hands. What I'm looking for on Monday is initial, if it opens up here, I'm looking for initial acceptance up here. And then I want to see, is this just a test and price is going to move back down for the day? Or is this acceptance and we're moving higher? Because if it's moving higher, then I can look at my other chart. Where is it? I can look at this chart and say, where is it likely going to go? Well, we're likely to go test this 31.35 level, right? And this 31 level, this starts to become my first opportunity for a short. And I need to close this up for tonight. But if this would be my first opportunity for a short. So if my next one is, if in this one, if price tests higher, I will look for an initial short at 1931. You see where I'm getting that from? Right here. It's a low volume area right here, and it's a low volume area right here. I can see from this that it was a decent unfair high and unfair low, right? Price came up, bounced off, a little bit of passing through, but once it got through there, it was a great unfair low. As price came down below it, it was a good unfair high, good unfair high. It tweaked up through it, bounced off, actually tweaked up to this low volume area at 37.75. And then once it got back down through it, it was a good unfair high. So that's my first opportunity for a short. Now, what if price opens up? If price opens up between 2015 and 2025, that's my next one. Remember, our first if then was always where does price open? So if price opens up between 15 and 15, 20, 25, then I will sit on my hands. That's it. I don't care what the volume profile tells me. I don't care what the print tells me. If price opens up in this area tomorrow, I'm doing nothing. I am doing nothing, and I'm going to wait until I see price come down through 17. I want to see 17 become an unfair high for the day, meaning I want to see resistance up around the 17 quarter level. And then I want to see price come down through it, and I'm going to start trading down to 13. And where is the next one? 1909, right? 1909.75, 1910, where I'd look for buyers again. Doesn't mean buyers will step in for the day, but that's where I'm going to start looking for buyers again. So now I have a short opportunity. If price comes down and 17 starts holding, I have a short opportunity, especially if we start gaining volume below 15. I'm taking that down all the way to this 10 level. where I'll scale out in front of it, and I'll start looking for to see if buyers are going to step in. If you were scalping, this could be a very good scalping area as well. Now, if price starts coming down below that, now we've got opportunity for further price movement to the downside. I'm going to start using this chart to say where are my opportunities. Right here, there's that 1907. Below that, if we get down below 1902, 1903 quarter, remember from last week in the morning, pre-market, 03, remember that 03.25, the first time in the pre-market, we saw a buyer step in hard. That still needs to be a key level. If we get down below that, we could see price coming way down. So the other thing I would look at is we do have a channel starting. And so tomorrow morning, the other thing I can see is if we start getting rotation and start getting volume above 33.75, I'm going to be looking for a long off a retest of 31, and I'm going to be looking for a target for sure here, but I'm going to be looking for a target here at 37.50, where I'm going to start looking for sellers to step in. Yeah, sorry, sorry I talk a lot. So, but I want to be thorough. Sorry, guys, ladies, guys. When I say guys, I mean people. Sorry, I know I take a long time and I talk a lot, but it's important for me that I'm thorough. And I know, but I get it all the time. I talk a long time, and I got 12 monitors here going, so when I got my office doors closed, my room heats up to about 114 degrees. It's like the middle of stinking Phoenix in August. But I like to do this, and it's really, really important for me that what I do makes sense, and you can start to begin to get the concepts of what it is I'm doing. So, yeah, I like to give. My goal is to always over-deliver. If anybody ever tells me I'm giving them too much, then I know I'm giving them just enough. So that's what I do in my trade plan. And on oil, for example, here is I don't have a longer. Let me just see if I do or don't. Yeah, I do. By using IQ feed, DB showed me how to do this, so I can use the continuous contract. Ooh, where'd it go? Where'd my profiles go? There they are. So on oil, I can do the same thing. You can see this level here at 98.80. You see how when I have identified it as a low volume area, and actually there's a range. So what I would do is I would do this. And here's what I can tell you about oil. If tomorrow or tonight price starts getting above 98, 99, 99 level, if price comes back down, the print shows you to go long, you go long off of that level. Go long off of that level, and this is weird. My volume profile keeps coming in and out, but look to take that trade at least up to 99.57. I mean, there is potentially a really good 50-tick trade on oil. Everybody see that? The longer term, shorter term, this is also a gap. We start bumping above that. Now oil, and I don't mean this, no pun intended, but is a little slippery. It can let the print tell you where to get in. But right now, the low volume area to the upside is 98.80. 98.80. So that's what I'd be looking for on oil. You start getting above 99, you get a retest, boom, long. So is this making more sense? Is it helpful to see how to use the profile to identify those areas of interest? Understand the print. You got to understand the auction, what's going on in the day being the most current context of buyers and sellers. and the next day and the overnight and the next day, you're looking to see, all right, are buyers and sellers still the same or something changed, is something different? Based on my plan, what is price doing? That'll tell me whether or not I'm going to sit on my hands or I'm going to take a trade short or long in a specific, or look specifically long or short in a specific area. And after you've done this for a little while in the different instruments, I'm telling you, I don't guarantee anything, but I'm telling you, your perspective, your paradigm on the instrument that you're changing, you will transform into a market guru. And I don't mean to say that tongue in cheek. You will transform into a market guru for that instrument. You will be able to look at a day relative to its overall context and say, well, if buyers did this and sellers did this and they defended this and they tested here and it ended like this, then the probability or the likelihood is they're trying to do this, and they're doing a pretty good job of it. And if they're trying to do this and it's long and they're going to test lower, where's my best opportunity for a trade that gives me the best risk reward? Sometimes it'll hit. I mean, most of the times it'll hit. That'll be great. It's worth your wait. If it doesn't hit, you got to find your next trade. Thanks, George. Yeah, you have to keep, and the Brian, it's a jigsaw puzzle, but it's repetition, 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 repetition. So we'll do this again. I won't. I'll try not to take as long. I think I've gone hour and a half, hour and 40 minutes. Yeah, IQ is just a data feed, not a broker. Yeah, and I'll find some mornings that we can trade together. Okay, and here's what I want to do. If I trade with people, because I've had some bad experiences in running a trading room, my goal in trading with people is to teach and get you to the point where you get it and you're self-sufficient, where you don't need me. Because if I create a scenario where you need me and something happens to me, then you're in trouble. I don't help you at all. So when I do a trading room, I want you to understand that when I do mornings and I'm trading with people, I'm doing a lot of explanation, and I'm talking through the auction and looking at the trade plan and identifying levels and saying, see what happens, see this, watch what happens. This is what we're looking for. There we have it. Okay, we're taking our short. So that is what I am all about in a trading room. The best thing that could happen, in my opinion, is for you to say, either number one, you could teach this, or you're just in a trading room for companionship and the fellowship and the social aspect of it, not for needing trading advice. That's my that would be my goal. So I do a lot of education when I go through training room. In fact, I call them training rooms, not trading rooms. All right, DB, I took up a lot of time. Again, I hope it was value. I hope that you guys all saw this as value and not just me talking a lot. And as long as we accomplish that, then I consider the night a success. Any last questions? Oh, I do want to show you this. Can I show you this before I go? Can I show you this, please? Okay. Sorry, DB. Oil market opened, and I'm watching. This is one of the things I do, especially with oil, because the print is so stinking thin, right? So the oil market opened up tonight, and I'm watching the numbers. I'm watching the auction. I see some selling coming in, selling coming in, selling coming in, and buying. 25. Okay, that's fine. Price keeps moving lower. I'm waiting. I'm waiting. I'm waiting. Boom. I see this number here at 68. 68, price test lower, the bid goes weak, strength comes back into the offer, I'm long. I'm long, and I'm looking at all this buying back up into here. I'm long. In fact, I got long, and then I got long again as price came down a little bit and took some off. And then expected price to, my expectation was if price kind of got through this level up here around 73, 74, that it would start to move higher. And actually, I'm going to take one off. I'm going to go down real quick. This is just sim because I knew I couldn't manage this trade, so I put it on in sim. This was my expectation. I was hoping by the time I was done, I can come back and show you what I was looking at and why I did this trade, but I don't have enough. I'm not just going to let a trade sit behind a couple other screens and let it go. And I was hoping to be able to show this to you. So what I would do right now with this weakness and strength at the right around this low volume area that I had marked is I would take one off. So I would sell market, sell one, and protect some profit, and see if we can't get anything further. But that came from, I want to show you where that came from. That came from looking at the auction on Friday and looking how this ended. I saw a test to the upside. So, and see this 97.74, last test was up to 97.72, 72.74, became a pretty critical area for oil on Friday. Here's 72. So my expectation was I would take price at least up to 72. If it got through 74, I was going to see price start to move higher. And you can see it take off. You can see 50, 30 momentum dots. You can see it start to take off a little bit more. And my expectation now would be at least a test of 97.89, if not higher for the day. But you know, we might see sellers stepping in around this 97 and 98 area tonight. VPOC was support. Yep. You can see it right there. Very good. Volume point of control came down. Weakness at the bid. You can see the sellers tried to really push again here, and then this is actually what catapulted price higher tonight is all of this selling right here. Boom, 26. See if I can make this bigger. 26, 24, 52, 38. They all got trapped. All these sellers got trapped, and then they started puking up here, right up here, over the high. And now I'd look for price to go even higher. Okay. Anything you want to say, DB? Not a bit. Okay, I said enough, huh? All right. Well, thanks everyone for joining me tonight again. I hope it was helpful. That's been my goal. You know, I wish I could have taken this trade alive, but there's no way I was gonna. It would have been really impressive, but there's no way I'm gonna leave a trade, especially in oil, sit there. I just wanted to show you at the open of oil tonight what I was looking for. Once I saw buyers stepping in, I looked for a weakness, got in. And if price would have started coming down much lower, I would have probably taken my stop, but I had a lot of belief that buyers were starting to get conviction here. And this is where I expected to see a bunch of stops is right above this level. And now we'll see if it will continue. Okay. Thanks, everyone. I will follow up on Wednesday. Wednesday morning, we will be back together. And I'll look to try to do some videos during the week as well. 7:30 a.m. Central. Thank you, DB. The reason I'm doing it earlier on Wednesday is because I want to go an hour before the open so we can get through a full trade plan. Yep. Okay. Thanks, everyone. I'm going to go and get some dinner. Have a great night.